Let me see if we have anyone else to say where we're from. Welcome, Miss D. We have past chair in the house. We are so grateful to have your presence.
Looking forward to this.
Me as well. Tell me about it. How you feeling today, love?
Good day.
Yes. Yes. All right, fam, we are recording and I don't want to keep us long because of course we have a short period of time and we want to acknowledge and make sure that we are in a time space that we don't take up too much of your time and leave time for questions and answers and allow Ms. Thompson to go over her presentation again. My name is Lovey Bradley. I am the current chair of the GWAP Foundation and we do these educational series every month. So definitely, if you get value out of this one, we would love for you to attend whatever we have going on each month. They change each month, and we want to make sure that we are out here educating the community on crypto, blockchains, Web3, NFTs. And tonight we have the treasurer of the GWAP Foundation, Charis Thompson, here educating us on this tax year 2022 and digital assets, which we all know is important. But before we get started, I want to tell you a little bit about Ms. Charis. Let me introduce you to her. She is a certified public accountant. She is licensed in the state of California. She has over 20 years experience in public accounting. She is a supervisor on her current position with Roschke and Wall, a division of Singerlewak. And y'all, I had to call her and say, y'all help me out, ma'am, with this name. She is a mother, she's a husband, she is a mother of 5, also a grandmother to 2. And she, of course, is our treasurer on the GWAP Foundation. And her specialty lies in tax preparation for business and individuals, accounting, government contract accounting, and auditing. So this woman knows what she is talking about. And I invite every last one of you to get your pen and paper so you can take notes. And then when I send out the replay, you'll have the replay and you'll go back to it and you will have it to be able to refer back to. So welcome to our first educational series for 2023. I would like to turn it over to Ms. Charis Thompson.
Thank you. I'm going to share my screen. And I want to start. Good evening and good afternoon, everyone. I'm in California, so it's afternoon for me, but for others, it's evening. So greetings to everyone. I'm going to start my slide. The bar is sort of in my way here. Let's see. Here we go. So today, with it being first of the year, can everybody hear me? And can everyone hear, and can everyone see the slide?
Yes.
Yes.
Okay, great. So with always at the beginning of the year, the big thing is getting ready to file our income taxes. And so I just like to present to you guys some of the issues with the IRS and with those who have invested in digital assets and us that would like to get more involved with the cryptocurrency, stable coins, NFTs, and just become knowledgeable of what the government, what the IRS has. And as far as our knowledge, maybe we can, with that knowledge and as a group, to lobby to get some of these. I'm a CPA, but also lobby to see if some of these that the IRS has, that we maybe can change it for our benefit. So let's get started. So now we're going to talk about digital assets because on the 2022 1040 form, the question that everyone has to answer is, they have digital assets. And this includes cryptocurrencies, stable coins, and NFTs. So our agenda tonight is I'm going to do a brief introduction. The IRS definition of cryptocurrency, the taxable versus non-taxable digital asset events, tax rates that we have for 2022, and also with the long-term and short-term gains, and how we report our digital assets on our income taxes. And then we'll have some Q&A. So as majority of us know, that cryptocurrency is a form of virtual currency. There's two major differences between the cryptocurrency and our fiat currency, meaning the dollar bill, the pound, the yen, the euro, because cryptocurrency is not a physical bill, physical piece of paper or metal, and it's decentralized. But even though these differences, cryptocurrency is taxed. So we're going to discuss how the IRS's definition, how they take cryptocurrency, how they are taxed, and how to report them on the tax returns, and some of the tools that are available to help us in being tax compliant. Now, the IRS considers cryptocurrency as property, not a currency. And they have issued some notices. There's a notice 2011-21, and they did one in 2014, and then they have one in 2019-24. I have a copy of that. So cryptocurrency is seen through the IRS as stocks, bonds, and other assets. And so if we have a cryptocurrency and we sell it and we receive fiat currency, that is a taxable event, and it's taxed by capital gains tax. But then we also have some instances where the IRS or the transactions we have with crypto is considered taxed with our ordinary income taxes. So let's get into it. So the next two slides, I'm sorry if it's too small for you to read, but I just wanted to give you some knowledge that the IRS is looking, that, you know, they're watching. If there's anything out there that it's making a gain or income, they want to get the taxes. So I just wanted to let everyone know, I've highlighted, I want to go down to, and this is found on the irs.gov website, but where I've highlighted on the bottom, the IRS is aware that some taxpayers with virtual currency transactions may have failed to report income and pay the resulting tax, or did not report their transactions properly. So they're actively addressing this non-compliance in the area. And so they're ranging from taxpayer education and then to audits to criminal investigations. So for example, in July of this year, which this year that they're referring to is in 2019, that they sent out some mailings of educational letters to about 10,000 taxpayers. And then the taxpayers who did not report transactions involving virtual currency or who reported incorrectly could be liable for tax penalties and interest, in some cases criminal prosecution. So that's the language that IRS has out there. Some of this language I know when we say IRS is sometimes it seems scary, but the main point I want to bring to everyone's forethought is just for your education, just to your knowledge. Working with the IRS myself personally, don't ignore, always call them, write, and explain your situation, not just in cryptocurrency, but any type of income tax situation. If you work with a tax professional, get them involved, but you can do it yourself, and never ignore it. And most of the time, if you come forth, explain your situation, show them your proof, they'll work with you. So I just wanted to make that point. And then also with President Biden, you know, he has sent a bill that the IRS for the past 5 years, especially through the pandemic, has been, the employees have been low on employees, on staff, on their computers. So they are really have been running behind. I think they're still working on 2021 as far as amending returns and getting things up to date. So with his bill, I think the majority of it is to get them staffed, get them computers up to date. There's someone, I'm sorry that there's some noise there. And try to staff the IRS, but also there's been talk that with more staffing, there may be more audits. So I just want to bring that to your forefront. Now, the 2019 issue is about a hard fork. This is more with your, I think, is it more with, I don't know if it's with mining or when you have a hard fork, it is, and it states here, it occurs when a cryptocurrency on a distributed ledger undergoes a protocol change resulting in a permanent diversion from the legacy or existing distributed ledger. And it may result in a creation of a new cryptocurrency. So when you have a hard fork, and because of that, you have a new cryptocurrency, that's a taxable event. If you have a soft fork, that means if you have this where you have transactions recorded on your distributed ledger, but then after the hard fork, there's no new currency created, then that's not a taxable event. So that was the main gist of this IRS notice. And this is also could be found on the IRS Gov website. Now, this is what I just took the top portion of our Form 1040 for this coming 2022, this tax return that we'll be filing. And I've done a small yellow arrow. I don't know if you can see mine. There we go. And it says, that's why digital assets. That's the question. It's on page 1 of everyone's 1040. And the question, and it's a requirement, and they want majority of everyone to e-file. So if you use a CPA to file your return, or if you do TurboTax, Tax Act, H&R Block, we can't e-file unless this question is answered. And it's at any time during 2022, did you receive as a reward, award, or payment for property or services, or B, sale, exchange, gift, or otherwise dispose of a digital asset or a financial interest in a digital asset? It says these instructions. So they want a yes or no answer. And they've had a previous question on the past 2 years, but now they're encompassing the NFTs and stable coins, so they're trying to get a bigger grasp of it. You would answer yes if you have a taxable event, no if a non-taxable event. Then you ask, well, how, what's the difference? So we're going to try to find out what they are. Is everyone following? Does anyone have any questions, or is everyone understanding? I'm just trying to give you a brief overview with the IRS view of cryptocurrencies and how we can be compliant and knowledgeable. And then we can see ways where we can do it to our benefit. Is everyone okay?
Yes.
Okay, great. Yes, okay, we'll keep going. So I've done a chart here. This is taxable versus non-taxable events in regards to your digital assets. So a taxable digital asset event is when you have a sale of a digital asset, which could be cryptocurrency, stable coins, NFTs. So that's when you are selling it for, say, the fiat currency. exchange of a digital asset for property, goods, or services. Now, I know we would like, those who use your cryptocurrency as currency. We'll get into that more, but even when you purchase goods and services with your cryptocurrency, that's a taxable event. And I'll explain a little bit later on how that is. Exchange or trade of one digital asset for another digital asset. Receipt of a digital asset as payment for goods or services. So when you receive that, basically that's revenue. If you run a business, of course, that's going to be a taxable event. Receipt of a new digital asset as a result of a hard fork. That's what we talked about in the IRS notice 2019-14. So if you get a new digital asset result of a hard fork, that's a taxable event. Receipt of a new digital asset as a result of an airdrop. I'm sorry, I skipped one. Receipt of a new digital asset as a result of mining or staking activities. That's where now you can stake some of your cryptocurrency and earn rewards or earn more of your cryptocurrency. That's a taxable event. Then, of course, receipt of a digital asset as a result of an airdrop, which was also in that IRS issue that we discussed earlier. Excuse me. Next, receipt or transfer of a digital asset for free without providing any consideration that does not qualify as a bona fide gift. And then transferring a digital asset as a bona fide gift if the donor exceeds the annual gift exclusion amount. So all of us, we can gift up to a certain amount. For 2022, the exclusion amount is $16,000. So you can gift up, cryptocurrency to anyone up to $16,000. And if you gift over that, if it's just to a person to gift, I'm not talking to a charitable organization, but a gift to family members, the person, the donor, the person who's giving, you have to do a gift tax return on your gifting, and that causes a taxable event. Now, for the non-taxable digital asset events is when you buy a digital asset. That's when you're just buying it and it's sitting there on your exchange in your wallet. You've just purchased it. When you transfer your digital assets from one wallet to another of your other wallet, you're just like moving funds from one, you're not making any earning, you're just moving it. Just think of an actual wallet that we have. You're just moving your cryptocurrency from one wallet to the next wallet. That's not a taxable. If you have a soft fork, which occurs when a distributed ledger undergoes a protocol change that doesn't result in a diversion of your ledger and you don't have a new currency, that's not taxable. Gifting is not taxable under the exclusion amount of $16,000. And when you can donate digital assets. So instead of, thinking of, okay, digital assets, then I'm going to sell it and donate the money, that is a taxable event. But if you take your cryptocurrency, now I think a lot of charitable organizations will accept, the cryptocurrency as a donation. You take that and you donate it specifically to the organization. Now, a caveat to that is I think it's over $5,000, you would need to get an appraisal. Now, this is where, being at a digital asset, they want other than just saying, okay, well, the exchange says my digital currency is worth this much. Because of the volatility, and I think with the FTX here in the news, people are sort of getting leery. And so they want someone outside, I guess a professional, I don't know how, but someone else to appraise your donation if it's over $5,000 so that you can get a tax deduction on your donation. So I'm going to go through, I know this is a lot of information, but I'm gonna go through some examples and
On that donation for the tax, exempt, is that for the year 5,000 or per donation?
that's a per donation.
Okay, so if you keep it under the 5,000, then you wouldn't have to do that.
Exactly.
Okay.
Exactly. Exactly. Okay, we're going to the next slide. So here's some examples of a taxable event with your cryptocurrency. So let's say you receive $200 worth of crypto Litecoin in exchange of services. So you might, you've done some work and they paid you in Litecoin. Then 6 months later, the fair market value of your Litecoin that you received for your labor or for your services is $500. And you use that to buy you some plane tickets. So on your tax return for the year that this transaction happens, this is what you will record. So the first is the $200 that you got for your services is ordinary income. And it could be reported on your W-2 if you're an employee or if you're a contractor. It would be reported on a 1099 NEC. So that's how that would be reported, just like we normally do already. But when you used your Litecoin that you received that was $200 worth when you did your services, it raised in value, fair market value. You have a gain. So that you will have a short-term capital gain of $300 when you use the Litecoin to pay for your plane tickets. So that it made two taxable transactions. And that's where we get now where the IRS sees cryptocurrency not as a fiat currency, but as property. So every time we do something with our cryptocurrency, with it gaining the value, moving up or down, we can't just say, it's a dollar bill. We don't, with the fiat currency, we don't do this. We would just have the first, and that would be it. But it still would be $200. The $200 that we received would still be $200, but because the cryptocurrency value changes, and the value when we use it to buy the plane tickets increased, so we could buy from that Litecoin that was worth $200, it's $500, and we can use that to buy that plane ticket. We have a gain, and so we report that capital gain, and it's a short-term capital gain because it was used to buy something, and you didn't hold it you held it for 6 months, less than 1 year. So that's a short-term capital gain. And then I'll show you which forms that you can record it. It'll be on two different forms. Your $200. Okay, your $200 will be reported on your line 1 wages and salary, and then the capital gain would be reported on the form 8949 and the Schedule D. I'll show you those forms, and we'll go through an example. So the next transaction, okay, so you have $1,000 worth of Matic, and you want to exchange it for $1,000 of Ethereum. Okay, so you do that. But when you originally paid $300 for your Matic when you got it, but now it's worth $1,000. You can exchange it for $1,000 worth of Ethereum. So now you have a $700 capital gain. So on your tax return, how would you record this transaction? So you have a capital gain of $700. So that's the difference of what it was worth when you exchanged it minus when you actually purchased it, the cost basis. And that's what I said, the Ethereum basis is its fair market value and then, so your Matic is gone, you got Ethereum. Now your Ethereum that you exchanged, now the basis for that Ethereum is the $1,000. And so you still have that $700 is your capital gain. And that is reported on your, again, the form 8949 and the Schedule D. And it depends on how long you held the matic before you do the exchange. It could be a short term if it was less than a year, a long term if it was more than 1 year. Okay, then another example is, okay, so I use Binance, and so I have staked some of mine in BNB crypto. So you have staking rewards. I know that's very common. So say you staked some of your crypto and said, okay, I'll stake it, and you get rewards. So I earned $20, for it. So the staking rewards is recorded as ordinary income. It's not, and it could be subject to self-employment tax. It says that in the code, but I would just report that as ordinary income. And it's almost like earning interest, in a savings account or a bank account, where you report that on your Schedule B, and it's taxed with your ordinary income. And the same thing with mining your crypto. You can receive, or I just said you receive a reward of $20 just to keep it simple. It's the same. You would record it as ordinary income. And these go on your Schedule 1 of your 1040, and I'll show you those schedules too. And I think this is my last example, and then we'll go through some. I'll let you see the forms. So now this is with your NFTs. If you want to get an NFT, you purchase an NFT with $1,000 worth of Ethereum. So you purchased an Ethereum a year ago at $600. So you've held that Ethereum for a year. So that's considered a long term. So this is a taxable event because the IRS recognizes cryptocurrency as property, not fiat currency. So because the Ethereum gained value, fair market value, and a year ago it was $600 when you purchased it, but it's $1,000 now, and you exchange it for an NFT, you purchase an NFT with your Ethereum, you have to report a capital gain. So you're going to report $400 as a long-term capital gain when you purchase your NFT with your Ethereum. So I also highlighted, so the tax on the long-term gain, considering, let's say if you're married filing jointly and you have a taxable income of $80,000, so you're going to pay a 15% capital gains tax. Oh, I'm sorry, and I've used the wrong, I should be $60, not a percent sign. Apologize for that. So your tax on that transaction is $60. Is everyone okay?
Yes, ma'am.
Okay.
On the staking, if your cryptocurrency is considered a asset, could that not considered to be like rent, like your house is an asset, or am I off basis on that?
Well, it's reported a different way. Just think of your and it's sort of that way. Just think of your house. Do you have
a rental or rental property?
Oh, the rental property.
A more accurate example, I guess. So we have a rental property. We rent it out, whether short term or long term, depending how you rent it out. That would determine the type of.
No, that is no. That rental income is going to be taxed at your ordinary income.
Ordinary.
Yeah, the tax rate. Okay. But now, if you have a home, if you have the rental home, the home itself, and you sell it, okay. Yeah, so you purchase the home at $200,000, but it's gained in value. So now it's like $800,000. And the base is $200,000. You're going to have a gain on that sale of $600,000. So you're going to pay capital gains tax on that gain of the sale.
Correct.
Yeah, so it's more like that type of and property. Okay. Anyone else? Everybody else good?
I guess the general question, because in this environment, it's been going the other way. So we report losses as well? We'll just.
Yes, yes, I guess I am showing a lot of gain, but yes, the losses. And that's how, yes, yes, you do report your losses. And that does help. But the caveat is they limit your losses. This is also in just regular, stock and bond investments. You can only use up to $3,000 a year loss on your capital gains and losses, but you can always carry it forward. And if you have a capital gain in the next year, and you carry forward your loss that you weren't able to use in the prior year, you can use that against it to get it to zero. So yes, you do show your losses. Now I do apologize. I guess I was stuck on the gains, but you do report your losses too, which is helpful. And I know if you have investment accounts, we need to think of our cryptocurrency the same way. And you go through your maybe at each quarter or half a year at the end of the year, and you look at your investment accounts, and you can strategize and sell your cryptocurrency at a loss and at a gain, so you don't get taxed. Or you see, well, sometimes you may need it, and you can't really strategize, but you can use your cryptocurrency. And as far as selling, and you can sell for a loss and sell for a gain, and strategize where you don't have to pay the capital gains tax. And so look for it as it is an investment. Okay, so these are the forms that I was referring to. So I'm going to open. Let me open this is the form 8949 first. Would it let me open it? There we go. So this is going to the IRS website, and hopefully the form will pop up for us. Here we go. So this is what the form looks like. And this
We're
is
still on the slideshow.
Oh, you still on the slideshow?
I think you have to unshare and then pick reshare.
Okay. Sorry, I apologize for that. Let's see. We went to another screen. Here we go. Now, can everyone see it?
Yes,
Yes, ma'am.
Okay, great. So this is one of the forms that you fill out. So this is for all of the transactions that you had that would be capital gains. Now, a majority of people, if you have a tax professional, or if you do your own taxes, use TurboTax, Tax Act, H&R Block, Jackson Hewitt, any of those, they walk you through it. And they also have like professionals that it may be for extra fee, but they help you through filling out these forms. And it's more like a question by question, and the tax software automatically fills out these forms. So I just wanted to get you just a knowledge base. So on the first form, you see on this first page, that's your name and social security number. This is for short term. And most of the cryptocurrency is going to be, you're going to select C, because it's not reported on your form 1099-B, which is a 1099-B, which is the brokerage statement. Most of the time we'll get ours from the actual exchange, or we may have to pull it from, can now see your application. Okay. Or you'll pull it from the actual, if you're mining, the site where you get your rewards or anything, or all the activity. It's been where it's on our the cryptocurrency owner, NFT. It's been our responsibility to get all that information. But I'm going to talk at the end, there's more help to help you gather this information. And it's back, and then in the future, maybe 2024, the form 1099-DA, which is the digital asset 1099, is in the pipeline. So it's more on the exchanges and places that we purchase our cryptocurrency and do our exchanges that will be helping us gather that information for our taxes. But you would be selecting C for if you have a short-term not reported, and this is for short-term gains or losses. And so you would put a description here. And I will show you at the end. I guess I'll wait, but even I'll use an example with Binance, but they do give you a CSV file, and it shows everything, all the activity that you did for the year. And you can total it and put it in and attach that with your tax return, or you can input, but it is getting better. So this is one of the forms that I discussed. Now I'm going to have to stop sharing again and go back to my slide again. Okay. Oh, I apologize. Let's see. Okay, so let's go back where we were. Here we go. And then this is the Schedule D. Is it coming? I can get it to open. Here we go. Here we go. And let me stop share. I apologize. I didn't know I have to do all this. Okay, here we go. So this is the other form. This is sort of like a summary of your Schedule D. And this, what you put on your 8949, you'll have a sheet for short-term transactions and long-term transaction. This is a summary. And like I said again, the tax software that you use and even the tax professional, it will sum it up. But majority of your cryptocurrency gains and losses are going to be on line 3B, box C, excuse me, line 3, box C, because it's not reported on the 1099-B yet, but it'll be coming soon. And then you can see here, I know with Ms. D's question about there could be losses. And then if you don't use up all your loss, you get to carry it over. See here, capital loss carryover. So look at your cryptocurrency, especially on the exchanges, as investments and do some strategy. You can work with your financial advisor, with your tax professional, or you can get together as a group and sort of, or with your family, strategize. And that's what, a lot of people do that have the millions and billions of dollars. They strategize so they don't have to pay the taxes. And then later on, when I show you the tax rate charts, you can see why we always hear about the billionaires and the millionaires pay less taxes than the regular people. We were just working, but I'll show you how the tax law is written in favor of the rich. But here's where you can carry over. There's your short-term carryover losses, and then on the bottom is your long-term. And again, you get to, if you don't use all of your losses, you get to carry them over. So if you, say if you had a gain of 50,000, but you had 40,000 of losses in the prior year, you get to bring over that 40,000. So only you have to pay taxes on your 10,000. Okay, so I'm going to go back to the slideshow.
Charis, while you do that, Mr.
Okay.
Jumped in a little later. And
Sure.
He has a question. Can you briefly go over the difference between short-term and long-term?
Yes, I can. The short-term is considered anything less than a year. So say you purchase, let's say you purchase Litecoin and you purchase it in June of, say, 2023, and you sell it in October of 2023. That's a short term because it's less than a year. Long term is you have to have it 1 year or over. 1 year is considered long term. And then that changes the capital, the rates, the tax rates. Very favorable if you can hold on, if you can, favorable to hold on to onto your cryptocurrency or your assets for a year or more, because the long-term capital gain rates are much less than the short-term. Does that answer? Are we good?
Waiting on a response.
Okay,
Yes.
okay.
Yes.
Okay, great, great, great. And then the other form, and then I'll stop flipping from forms. It's the Schedule 1. You know, when Trump came into office, he wanted to do the, what is it? It was called the postcard. But what he actually did was he made more forms to fill out. So the stake and reward, or rewards from mining, is considered other income, and that would be put on your Schedule 1 form from your 1040. So let me do that right fast, and I'll stop switching over. Let me stop sharing. Okay, so the Schedule 1 has a little bit more questions on it, but what we're going to concentrate on today is here, other income. It's line Z. And here you would put in, you could put in your staking rewards from Binance, or staking rewards, and you would get from the exchange, you should be able to get a summary for the year. And that's your income, your staking rewards, and you would enter it here on 8Z. And all of these would enter for a total income, and that flows into your 1040 page 1. So just to give you a knowledge of what it looks like. And like I said, working with tax software and with your tax professional, just giving that information, putting in the software, it will automatically populate. But just want to give you knowledge of where you would enter your staking rewards. Okay, so we're gonna go back to the slide, and I apologize. This will be our last time flipping. Okay. Now, okay. So I just did a brief, and we've talked about it, I've sort of gone over it, but the short-term gain is less than 365 days. And the 2022 regular income tax brackets range from 10% to 37%. And that's where the short-term gain tax rate lives. But the long-term capital gains tax rates are much favorable. They are if you hold it more than 365 days, more than a year, and your long-term capital gains tax rate is 0%, 15%, or 20%, depending on your taxable income and your filing status. And short-term, even if you make $10 a short-term gain, you're gonna have to pay 10% on it. Here, you have a chance in long-term capital gains tax rate to have zero, none in this category. And like I stated before, your long-term capital gains are generally lower than your short-term capital gains. So if you think of people who have, slang old money, they've had investments forever. So they've already met that long-term capital gain. And if all of their income is from investments, earning interest, earning when they sell stock or sell their cryptocurrency, but they've held it for longer, let me show you. Let me keep going. So this is the 2022 income tax rates for single filers, married filing jointly, married filing separately, and head of household. So that's just your ordinary income tax rates. Okay, so even your staking rewards depends on where you are. That's how much tax you're going to pay. This is your tax rate. Now for the short-term capital gains rate, it's about the same. It's the same. There's no difference. But when you get to your long-term capital gain rates, to say you don't have, okay, let's just say if you don't have a W-2, you don't have any type of contractual work, you live off your investments, like your trust baby. You live off your investments, you live off your interest, the selling of your stocks and your bonds. And you're single, you make over $459,750. That's all your income. You're taxed at 20%. You make that much money and you're working, you're going to be taxed 35%. I'm going to go back. This is the income tax rate. You're going to be taxed 35% if you have a W-2, if you have the rental income, if you have any type of 1099 that you do some type of contractual service. You're going to be taxed at a higher rate than if you have all this money in your investment account and you sell it, you get gains or you get losses, you get interest, dividends. You're only going to, without saying you don't have any W-2 income, you don't have any other income coming in, you're just going to pay 20% on your capital gains rate. And if you strategize, to offset your gains with the losses, you might end up paying much of nothing of taxes. So that's how the 1% or more, that's how they pay less taxes. So I had used this example before. So let's see our tax. This is about us purchasing $200 worth of crypto, Litecoin in exchange of services. So I just said, if you're a single taxpayer with taxable income of $60,000 for 2022, you're in the tax bracket of 22%. And so the tax on your earnings is $44. Okay, then if you're the same scenario, you're a single taxpayer. This is on your capital gains from buying your plane ticket because your Litecoin gained its fair market value. And it's a short term though. So short term, you still have to use it's the same as the income tax bracket. So you're gonna have to pay 22% tax rate. So it's gonna be $66. But if you had held it for a long-term gain, it would be at a 15% tax bracket. And so you would pay $44 compared to the $66. Sorry about that. So that's just, I know this is very general, I just want to give an idea of how the IRS sees cryptocurrency. Even if we treat it as currency, it gets that extra taxing because it's seen as property. And because if you sell it at a gain, you're going to be taxed at the capital gain tax rate. If you have a loss, you're good. You don't have as far as, paying taxes on it. Now our next is, okay, but the exchanges, there's some, and some of you probably familiar. I just listed probably the most known. There might be some other, I know there's others that I've left out, but probably the most popular or well known, that they are to start sending out 1099 forms. You got your Cash App, because Cash App, you can get Bitcoin now. You got Coinbase, Coinbase Pro, Coinbase Prime, your Binance US, Gemini, Kraken, Bitstamp, eToro, Crypto.com, Uphold, Bittrex, Robinhood. It's not a crypto exchange, but they are a broker. PayPal Crypto and Celsius. So in the future, I hope this year, you may be seeing, you may not get anything in the mail. You may get something in email. You may have already from last year saying, your tax document is ready for you to download, or you can go on the exchanges and get your history of all your transactions off the exchanges. So this I have a list and of all the exchanges, most of the popular. So you could receive a 1099K, or you could do a 1099B, or you could use a 1099 miscellaneous, either one, on these cryptocurrencies. Now, what I was talking about in the pipeline in the future is the form 1099-DA should be available in 2024. So this is a 1099 form specifically designed for cryptocurrency. So it's going to show information that you would find on a 1099-B, which is a brokerage statement that'll show your staking rewards. It will show all your transactions from your sales of cryptocurrency on cryptocurrency. This will take effect for tax year 2023, but it won't be available until 2024. So that's something that'll help us as far as gathering our information, that we won't have, it won't all be on our shoulders, that the government is helping us in the exchanges, gathering that information for us so we can put that on our income taxes. And also a help out there, if anyone hasn't tried, there are cryptocurrency tax calculators and software to help. And I listed, this is the website that I got it off of, a softwaretestinghelp.com, and it says best crypto tax software. These are all links. I played with TaxBit last year, me personally. I have, like I said, I use the exchange Binance US. Then my husband has crypto.com. So I use TaxBit to download our transactions from our exchanges, and it will put your exchanges on the form 8949 and the Schedule D. And it'll help you. And TaxBit specifically works well with Binance US. So with this listing, you can go in whatever you think that would help you and play around. There is a fee. I think I might have paid around $100 for the year for TaxBit. I know I said I wasn't going to switch screens, but I'm going to switch screens because I like for you to see it for a little bit. So I'm going to switch screens one more time. Okay, so this is the website that I took it on. So I want to find TaxBit. And then so it says here, this is like the pricing. All of them have some pricing. It says here supports more than 150 exchanges, 2,000 plus currencies, and all of them are like that. This works well with Binance US. So there is, and this was founded by a CPA. So there is help that you can get all of your crypto tax reports together to help you in keeping track of what you did. You can see what you did through the year. And help you with, as far as reporting your gains and losses of your crypto transactions. So you could take that website that I got listed, but it lists all of them that I have on that slide for to help you out. And then, like I said, again, the TurboTax, I think almost all of the software has implemented something there to help you deal with your cryptocurrency as far as filing your income taxes. I wanted to, here we go. That's what I want to do into TaxBit. So I'm going to log in. So I have something, I think this is from 2021. It does tell you, if I hit on taxes, that tax forms are not available yet. That means the usually they come available maybe in the middle of February. So they don't have the tax forms ready. So there's nothing I have imported from 2022, but let me go to 2021. And there should be, I just want to show you. So here you've got the IRS 8949. So you can download that. And so you can see here, you can get a CSV file, a PDF file. This will automatically connect with your TurboTax. You've got Tax Act, you get the Walters Clower, and then the Cash App. So you've got things where you can download it. I think that these are the tax, maybe Cash, I don't know if Cash App has a tax where you can prepare your tax return. And these are just, this is like a file that you can, maneuver on your own and import into your tax return. I think I have, let me see if I can find it here. Do you still see my screen? Okay.
Yes.
Okay, I got a lot of things listed. So I wanted to show you, oh, here it is. So this is what downloaded from the, from Binance into TaxBit. So this, can you see it?
No, we can't see the form.
Oh,
We're
I'm
on the
sorry.
TaxBit website. Yeah.
Okay, I'm so sorry. Okay, so let me, next time I do a class, I'll know. I didn't know it would change on me like that. Okay, now you can see. It's an Excel worksheet.
Got it.
Okay, great. So this is what downloaded from the TaxBit. So it's showing, and you see also that says property. It doesn't say, it calls it property, but you've got the quantity, the coin, the date acquired, the date that you disposed it, your proceed, how much you got when you sold it, the basis, that's how much I paid for it. And so I got a gain. And then it was a short term, and it was for tax year 2021. And you remember on the 8949 when I said you would click the C, it's telling you to click box C because you got your information. It wasn't reported on the 1099B. It was, so that's the C. And so you can see for 2021 out of Binance, I had to report a short-term gain of $326.87. This can import, this can import into a tax return, or you can make this a PDF and attach it. And your tax software or your tax professional can help you. You can summarize this and you can attach this form to your tax return so the IRS will have all detail of your transactions. So that helps, it helps out tremendously. And it looks like every year it's getting better and better. So we can, it'll help us, those who are interested in staying in cryptocurrency, learning the IRS laws, learning what's out there and learning how to strategize. So it could be to our benefit. So we know what we're working with. Okay, I'm gonna stop sharing and go back to the PowerPoint.
That's nice. You can import, because I was in my head like, if you have to line by line put all
Yeah,
that.
you can import, and even if you can't do line by line, you can sum it up and say see attached, and you can put like sum up all of the proceeds and the cost basis and show your gain or loss and say see attached form, and then just make it a PDF. And you can, because majority of our forms now are e-filed, you can e-file it, you can attach it to your e-file. So it is becoming easier. And And I also have, I won't, because I've been flipping a lot, but I also attached, there is on the IRS website, they have that frequently asked questions. And I've got it here. The link would take you straight to it, but all the questions like, and I try to go through them, but if you, just for future reference, you can go through and look through those. Those are what people have asked the IRS, frequent questions, and they've answered them. You know, how you can handle like your NFTs or using a cryptocurrency for, you know, for goods and services. You just remember that with the IRS, it's considered a property, not a fiat currency. So the change in value, have any transaction, if it went up, it's a gain. If it went down, it's a loss. So you have that extra tier. And I think in the future to get easier, you know, as far as reporting, it'd be easier for us. I do think there's, you know, to stay invested in the cryptocurrency. I think it gets us in the investment, you know, to see it as, and it is an investment, you know, to get our community in the investment, and to learn more, because we are going into digital age. And just think most of our transactions, we don't use a paper money. It's all electronic anyway. So I thank you for your time. I hope it was beneficial. I hope, I know it was a lot, you know, a lot of information that I was throwing out, but you sort of got the gist, and know where you can find things. And if you need any help, I'm willing. Like I'm new, it's new. This is new to the tax profession, for the CPA profession. This is all new for us. So we're having to learn with everyone else who's in the cryptocurrency world. But I hope this was very informational. I thank the Walt Foundation for allowing me to present. And I hope that this will perk your interest, that you'll come back for more and get involved with our community. So I'd like to turn the floor back to you, Dr. Levy. And I'll stop my share.
Okay, thank you. Ms. Ernestine said it was wonderful. She will need to go back and watch it a few times. I agree. It's really helpful. Understandable that it's still new to all of us. Charis, what city do you live in? I'm in San Diego.
I live in Newbury Park, California. I'm in Ventura County, California.
Yes, it was very informational, and I truly thank you. I'm like Ms. Ernestine, I definitely need to go back and listen again. So I want to say to everyone, like, this is what we were set up to learn for our itinerary. The IRS definition of cryptocurrency and notes, the taxable and non-taxable currency events, 2022 short-term and long-term capital gain rates, how to enter cryptocurrency on the 2022 tax return, and a list of currency and tax softwares that are available. Do you all feel that Ms. Charis gave us what she said she was coming to give? I think you did a phenomenal job, even with the flipping. That is totally okay.
I will improve on that in the future.
Don't let your brain tell you it was not. It was totally okay.
Okay.
We're gonna open the floor up for a few moments. If anyone has any questions, we will definitely take the time to ask any questions. You can raise your hand or unmute yourself. There are only 5 of us left. Quite a few had to drop off. We understand that. So if you have any questions?
I had one further little clarification on. So we're doing some staking, but we're getting paid in a cryptocurrency that is not yet listed on any exchanges or CoinMarketCap or any of that stuff. Is that then considered unrealized until it is listed, or how would that?
You know what? I am not sure about that. I would have to research. If you can't find a value, that probably is unrealizable until you can get a value.
Yeah.
Mm-hmm, mm-hmm.
So the obviously what we're staking was just listed on the exchange. It's listed on 2 exchanges currently. So it's a ICO, and that we were a part of, but we are getting paid in another stable coin, which is, it has a 1-to-1 value is what it's supposed to have. But like I said, it's not listed anywhere yet, and we can't exchange it yet for other currencies or for cash, so that's why I was wondering if that would be considered unrealized currently, and once it does get listed, then that would be realized gains at that point. Or
It sounds like right now that it's non-taxable. If it's like a 1-for-1, there's no gain, there's no loss. So for now, I would say that think it's non-taxable until you get more value set. So
Well,
yeah, I would agree.
here's so just for terminology, let's say I'm staking Bitcoin and I'm getting paid in USDT, which, let's say USDT isn't listed on the exchanges. We're getting a return in a different currency than what we're staking. If that helps you answer that better, I guess.
Well, USDT that's in
that's not what we're getting, but that was
Oh.
an example to kind of give you an idea. We're staking like a value token, but we're getting paid in a stable coin. If
And there's no value in that stable coin yet.
not anything that is actionable on any exchange. No.
I would have to really research it, but I think you're right. It'd be unrealizable until there's a value. But I'll research.
Now, obviously, if we exchanged it internally between other investors in the group or for other products or services, that would correlate the taxable event. But until that time,
right,
that it would be unrealized.
Yes, I would agree with that.
Internally, it's just with the company we're dealing with. Internally, we can use that stable coin to buy the value coin. At that point, that would make it a taxable event as well.
Well, do you know, is there a basis for that stable coin? I think that's what's the basis of
the
that?
basis is it's supposed to be one stable coin equals $1. USD. It's pegged to the US dollar, like USDT. It's just they created their own. They're creating a marketplace to be able to have businesses on there offering services and products, and being able to use the stable coin to exchange, which we've done some of that, which obviously that would be considered a taxable event. I understand that. But for that we can exchange for,
the only, if it's like it's valued, if one coin is valued $1,
which I actually have I do an educational deal usually once a week as well, and I got a group after this, so I was trying to get some other people.
It's a good question. I don't know, because the way that I guess looking at, I guess it's probably from what we have dealt in the past, you're looking at more future stuff. If the value of that, whatever you're, like the coin that you're,
yeah,
if you hadn't
got multiple layers,
it does. If you hadn't staked, I wonder if the staking,
because the staking is on the value token, which can change in price. It's on the market, and it just got listed here in December. So that has value in it, which we can correlate to like coin market cap and whatnot to get a value off of it. But as far as the stable coin, it has not been listed yet. So that's what we're trying to figure out.
You know what? I do not have an answer for that. I would really have to look into it.
Okay.
To me, if you're getting some, because of staking, you're getting a reward, that, to me, that would only be you've earned something from staking it. And that
Right, and
part
that's
would
where
be
we were looking at
the
it as
ordinary
kind of like a
income.
rental income, or like you were saying, interest.
Yeah,
or
that would be
dividends.
ordinary income. Yeah, that would just be taxed as
But
ordinary
the
income.
thing is, we're getting paid in something that's not on the market yet anywhere. So would that be
I don't know.
unrealized or realized?
I-
That's
You
what
know
we're
what?
trying to.
Oh,
get to.
that's a question. I don't have that knowledge. I do not know. I'm
Yeah.
sorry. That's a research. I would be, if you find out, I would like to know that answer.
For sure.
Mhm.
Right. Well, and that's I've talked with multiple accountants, and depending on who
Uh-huh.
I talk to, they see it one way and they see it, others see it.
Yeah,
differently.
yeah,
So,
it's sort of something. If you can, basically, if you have a reasonable argument,
Right.
and to prove your point, you can always use, because if there's something, if it's something that's not out there yet, but if you have
Right.
something reasonable, a plan that can prove your argument, and if there's any question that comes, you have that, it's a good chance that it'll go,
Okay.
Mhm.
The other thing, have you ever done like 1031 like kind exchange with between cryptocurrencies?
I have not.
No. Okay.
No.
So that was another thing we were looking at also, because we
Okay.
went from one to another, and it's like kind, going from one cryptocurrency to another and using that as because it's property, you're going from
It's
one property
property.
to another. So that's something else that we're
The
looking at also.
thing I would, because doing a 1031 exchange, that's, you want to defer that gain. I have not done any.
Okay.
Have you researched it? Has there been any
I've talked
out
to a
there?
couple accountants that they feel confident with what they have to do that.
Oh,
So
oh,
that's kind of what it's very gray area. So,
it is. It
you know,
is.
but I mean, it's, if you think about, you're moving from one property to another.
It is. It
And
is.
if that's how they're classifying it, I don't see why it wouldn't. But
That's true. That's true.
so that's something to also consider, possibly. If you do have large capital gain, if you're going
Exactly.
from one to the other, you can possibly
Want you
do
to
that.
defer that gain. Mhm.
That's just an informational return saying, hey, I moved from this property to this property, and it's within the time frame, which most
Yeah.
it's the same day usually when you're doing that.
Exactly.
So
Interesting. I'd like to learn more about that, but no, I have not been involved with that either.
Okay.
Very
Put that on your
interesting.
to-do list, Charis.
Yeah, I know. I wrote it down, both of them. Both of
Yes.
them.
Thank you for that.
Thank you.
Does anyone else have?
I'm not an accountant. I just love studying it. So
You're like to study it. That's, yeah. And you're
I got
in the
my
gray area.
bachelor's degree, but I didn't want to do all that, the other stuff.
Right.
Well, like
You're working
Charis
in,
said, you're
you're
the-
working in the gray area.
Yep.
Yeah.
Yes.
Yeah.
He's
yeah.
bringing out the questions that we need to think about for future. So that's great.
Exactly. It is great. Exactly.
Are you complete?
I think that's all I had for you guys. Appreciate your presentation, and it brought some things to mind that I hadn't quite thought of. So
Okay, great.
Yes, for sure.
Now that I said I didn't have any more, something just popped into my head. What about, do you do a lot like running cryptocurrency through businesses and things like that?
Running crypto.
Like under a business entity, like LLCs, or,
The firm that I work with, no. I'm sort of individually, getting the knowledge.
right.
Accountants are usually very conservative.
Right.
Everybody in my office is sort of scared of it. So I'm just taking the knowledge, but I don't have that experience, but I would love to learn.
Purchase with a company, obviously those are going to go on the company's tax returns versus
Exactly.
individual, which whether they
Exactly.
come through on a K1 or, you know,
Exactly.
they have
That's
their,
what it would happen. And you would still report any, you still have your Schedule Ds and all that, and the gains and losses, which would flow through all the owners and the partners to their K1s. Exactly.
right.
Mhm.
So, okay. All right. I think that's all I have.
All right. Well,
Final
All
answer
right.
this time.
we appreciate, no, we appreciate all the
Yes,
questions, you know,
yes.
things that a lot of us that are new to the crypto world wouldn't think of, and that will
Exactly.
start our wheels and brains to turn in. And of course, like I told Charis, she has homework, and so
I do.
that's her lane, and I allow people to stay in their lane, and then I will learn from her, and everyone else could learn from her as she go out and dig and do the research. So thank you for all those questions and
For
concerns.
sure.
Does anyone else have any questions or concerns? No? Or for the sake of time, I will move us right along. So if this was beneficial to you and you would like to offer the Foundation of Love donation, you can do that via Cash App. I put the Cash App up there. You can also send Guap Coin, and you can email us to ask us for the address to send that if you prefer to send Guap Coin, of course, the USB through Cash App. And the most important, your most valuable asset, your time. On the board, as you know, we are here to educate the community on all things crypto, blockchain, Web3, NFTs, decentralization, and of course, as far as Guap, the DAO. And so we would like to continue to educate about the DAO, the creation of the DAO, the growth of the DAO, and fundraising for the DAO. So if anybody is on this call or listening to the replay, we would love for you to come onto the foundation board, share your gifts and talents. We're looking for a secretary, a director of tech, a director of fundraising, or if you have some other area that you would just like to come on and be a member at large because you know you have knowledge, we will be more than happy to have a deeper conversation with you. So I wanted to make sure that we not only love the love donation so that we can use that to fund the DAO and do things in the community, but we also, there are other ways to donate in a lovable way, which is your most valuable asset, your time. So keep that in mind. And this will conclude our presentation for today. I want to let you know, coming up for February and March, we will be having, and want you to look out for our community forum dialogue, which we will be dialoguing with the community on a platform like this, Zoom, and talking about all things crypto, blockchain, Web3, NFTs, the DAO, and getting feedback from the community and educating the community. That'll be coming up at the end of February. And then we're going to have a community DAO meeting, which will be coming up around the beginning of March, somewhere in there. So be on the lookout in your email, on our YouTube, not our YouTube, our Facebook, IG, and Twitter, and LinkedIn for those dates. We would love to have your presence ready to dialogue back and forth with us. And also, if there is anything that you would like to see the foundation give a class on, connect with us at guapfoundationglobal@gmail.com. And we will be more than happy to put that class together. Or if you know you have a wealth of knowledge and would like to teach a class, we are open to that as well. All right, fam, this concludes our presentation for the evening. We thank each and every one of you for showing up, and those of you that are watching the replay. My name is Lovey Bradley. I'm the current chair of the board. And Charis, thank you for your time, your knowledge, and your education series that you provided for the month of January on digital assets 2022 taxes. I thank each and every one of you, and we will see you next month.
Thank you.